Okay, story time. In line with this comment, this is the strangest thing I ever told a client, and I hope I get to tell a client to do it again. You're going to have to wait and see what I told him. So context, this guy was selling his business, and he looked like he was going to qualify for the small business CGT concession. There was one big problem in that he was just over the $6 million maximum net asset value test. If you're over that test, you get no concessions. You've got to be under it. And going through the tests, one of the big assets in his name was about 1.5 million of cash sitting in his home loan offset account. And I remember talking to the partner about this at the time. I said, this guy's a boater. He's a mariner. He loves yachts. He was telling us that once he sold the business for about 3 or 4 mil, he was going to buy a big ass boat. Now, the transaction hadn't signed yet, the heads of agreement, so he still had time to change the net asset position. Interestingly enough, personal use assets are not included in the $6 million maximum net asset value test. So here's what we told the client. We said, you need to get $1 million off your $6 million test. We know you want to buy a boat. You should go and buy a yacht before you sell the business. This is probably the most positive client reaction I've ever had to our advice. He was pretty happy with it. He went and spent $1.2 million on a boat. I believe the hardest bit was him convincing his wife that his tax advisors actually told him that. We had to speak to her separately and say, here's why we have to buy the boat now. We know he's going to buy it after anyway, but let him buy it now. Anyway, guy sold his business. Guy got a boat out of it, and he saved more than the cost of the boat just in sheer tax.